Good morning, everybody. Welcome to the Flow Show. Monday, 10th of March. Time to do battle again with the markets. Hope you're doing well. Hope you all had a good weekend, a restful weekend. Morning, Kate.
Good morning, Ryan. Good morning, everybody. I hope everybody had indeed a very good weekend. We're ready for the next leg in these markets.
Yep, absolutely. And quite a busy one for the euro already. First thing. Oh, and dollar yen tapping that 147 level once more. I missed that last week, and it's that one of those ones where it's gone for where you get three goes at it and you don't get any of them. And then if you go and do it now, it's going to bust through the level, mate.
Yeah, usually that's the the third or the fourth attempt is the correct one. I don't know what to do with it here, Ryan. To be honest with you, but I'm slightly the other side in euro yen, so it's a bit tough for me to start buying dollar yen, but it's undeniably a level. I mean, this always the thing. If you want to play the intraday, the short term move, you can catch a knife here, but then beware if it breaks below. Don't You can be wrong, but don't stay wrong if you catch a knife.
Yeah, absolutely. But
Mm.
yeah, my rules always I like to trade the first attempt or the
Mm.
first test of big levels like this, and that would have been a bit of a doozy up, at least 147 and a half before that retest. But this is the fourth time of asking, so probably a good chance that it might break this one. Anyway, we'll look at that again in a minute. Let's get through some of the headlines. Going to go with some data first. Um, China, not good news for those guys. Inflation going back into the negative for the first time since January last year. Not that it got far off the mat anyway. CPI there coming in at minus 0.7 year on year, worse than expected. PPI as well, that's been a negative for bloody forever. So no difference there, down 2.2% year on year. So probably another reason why the central bank will look to ease sometime. And I think we could be getting that pretty soon. We shall see. Over in Japan, we got some wages data as well, and that doesn't put up the full numbers on this calendar here. But anyway, labour cash earnings were up 2.8%, slightly missing expectations of 3% previously. Now that was down from a hefty 4.8% that got revised to 4.4%. So December's numbers, they had a big uplift in those numbers, maybe something to do with bonuses or the like, as we remarked at the time. So no real surprise to see a bit of a pullback on that. However, real cash earnings, and this is the important one, that fell 1.6% from a prior 0.3%. That was slightly revised down from the 0.6%. So I think, Kay, maybe just some of that bonus shenanigans playing out towards the end of the year last year.
On the Japanese front.
Yeah,
Yeah, that's what we said at the time, right?
yeah,
Could be the end of year bonuses. Yeah, and Ishiba was quick this morning to try and push the companies and unions to agree on higher wages again, because that's one thing that they would not like to see at all. Is those wages coming back down, because that would derail a lot of Japanese plans.
yeah, absolutely. Yeah, so he mentioned about hoping that firms kicked up wages. He also said the BOJ is close to achieving its goal. Now, one thing I want to point out and get your advice on, Kay, or your view on, we're seeing a bit of a blow up in Japanese yields once again.
Yeah.
And there was a 5 year auction that had the lowest bid to cover since June 2022. And these yields, pretty much all these yields, up to the highest since 2008 in
Yeah.
some cases.
Yeah, and we know. Okay, this last year's was a bit of a different a different game, of course. But there is a bit of we're March, the last month of the fiscal year, and a lot of companies need to manage their books, as well corporates as pension funds, the GPIF probably needing to rebalance their books a little bit to close their fiscal year. So we can see those kind of moves in the bond market. I also think that there is those wage talks going on. They're asking really for big wage hikes again. So there is stuff coming together in March. We also have the Japanese corporates. They probably will need to repatriate some profits, but will they keep them in cash is a different thing that I don't know what they are going to do with it straight away. But yeah, there's a lot of book managing in the month of March, and we know with the yields have come up that much, that there might be something big coming, but I think it will be for the month of May. So around here, I would not completely counter trade that yet, but keep a very close eye on where those yields are. And if you're right in putting on the long-term one, and you look back at 2007, 2008, we are nearing in very rapidly to those levels. I still think that come the end of the month, starting of the next fiscal year, the Japanese whales may start to have a real big interest in those Japanese government bonds. We will have to see when the time comes what the hedging costs are, because they are, of course, looking at the hedging cost if you go into Japanese bonds, but the hedging costs versus the rest are very big. It's perhaps not useful to repatriate too much money, but I think that is at play. And obviously, when the rest of the, barring euro, but um, their biggest investment line is still the US. If you say higher Japanese yields, you say less divergence or differential on with the US yield. So that as well is helping the yen, I reckon, right now.
Yeah, I was going to
A lot
say
of
there's
stuff coming together in the
yeah.
month of March as well. So that is something that we need to pay attention to, because we can have moves. And then I'm thinking, like, we're the 10th of March, give it another 3, 4 days, and then that's where they really are going to enter their end of fiscal year. And I would really advise our um, audience to be very closely on the ball to what's happening in the Japanese sessions as well.
Yeah, because the fixes are going to be important, especially the Gotobi fixes, of which one is today, being the 10th. Every denomination of 5 days, that obviously working days. But yeah, there's definitely a divergence at the moment between what happens in dollar yen and 10-year yields. So yeah, that's got to be watchful. Do you think some of these whales might wait for the BOJ meeting? Unless they get a real clear indication that nothing's happening, just in case they get a hike at that meeting.
Yeah, I if they would be completely based only in Japan, I would say they are going to wait for April to because then that is when they will be deciding it right now, but then that is when they will be putting in practice, or putting in market terms what their investment plans are. I don't think they will really press the buttons in March, BOJ or not. I really think it's going to be something for the new fiscal year, but they will obviously, because the pandemic, probably the prior crisis, even because those guys are long-term investors, will have told them to be a bit more dynamic on their hedging, on their maneuvering their money around. So we could see uh, some of it, but I don't think they will be banking on the Bank of Japan, Ryan, to make any decisions. The thing where we are having a little less clear view on whatever they do is that they did give out parts of their business to external asset managers, money managers, and of one is one of which is BlackRock as well. So they are also managing some money for those Japanese whales. So there may be that they move money a little faster than they would used to. But I would still say that for to know what the Japanese whales are up to, I think the bulk will be done in the new fiscal year.
Yeah, absolutely, mate. And I'm just watching this, Dolly, and I might have a little short try while we're doing the show. Just a little play, see if this break of 147 is going to hold. Anyway, moving on, over at ECB farm, the ECB farm, all the sheep are prattling on. ECB's McClough says it makes sense for policy to proceed cautiously. Must be cautious, prudent and humble. ECB Centeno, very concerned about Europe's struggling economy. He's one of the big doves over there. Says further cuts are likely, but the ECB should be open and follow a data-dependent meeting-by-meeting approach, especially due to the current uncertainty regarding economic policies. But I say we're almost out of the woods in this inflationary cycle. ECB's Kazakhs says we must keep an open mind for April amid the uncertainty. There's lots of stuff going on over in Germany's politics to do with this 500 billion whatnot fund. The AfD party, who threatened last week to file a complaint to the Constitutional Court, has done so. That's been confirmed by the court. It also seems that Germany's Green Party are putting in a bit of a fly in the ointment. They are suggesting that they're not going to back Merz's fund either. So that's two of the big parties, or two of the possible swing parties, the AfD being the second biggest party, the Greens being potentially part of this coalition, throwing flies in the ointment. Euro doesn't seem to care at the moment for all that news. It half rallied on this 500 billion spend, but the market seems to be taking a ignoring tactic about this news. Kay, can it torpedo it, or is this just the usual horseplay?
It could partially torpedo it if the Greens go with a 100% no, because then that would leave those two other parties, CDU and the other one really at odds. But what's happening right now, Ryan, is a shift. And money managers, models, they will not react on one headline. I think, and exactly, I said this morning, look at the time where euro dollar got lifted, right? It's right at 9 a.m. London time. That may hint that there's some model funds, asset managers giving instructions at a certain time, coming up with a shopping list, and we've seen at that time euro and also euro crosses getting a lift. So that tells me that there's still some money managers in the midst of operating the shift, and the shift is mainly into euro. I've also just seen, like literally minutes ago, that I think it's HSBC or so. They say like they are rebalancing between US and European non-UK stocks. So that means euro for sure. And I think we're still in the midst of that rebalancing now. Will it last is the next question, right? That is the that is the real question, because if the Greens say no, then I mean it could be that the card house completely falls apart, and then we see a big reversal in all things euro. But there's the euro, and then we need to look at the dollar side of things as well, right? Selectively, as I always say. But cable is finding bits on dips. Kiwi found bits on dips. The Canadian dollar is doing a bit better, but that's probably a move saying that the market prefers anybody but Trudeau. but you also see it in the Scandies. The dollar is on the defensive. There's still a shift operating a bit out of the dollar, right? And so that's a double lift for the euro right now as we speak. Again, as we speak, because um, the funding and the big package is obviously a positive because Europe gets its act together. We've also seen a much better investor um, um, confidence number this morning for the Eurozone. It's probably on the back of this sentiment. The problem with the euro is that, and it's been proven time and time again, we've got those um, positives or those green shoots or this and that, but it tends to wane relatively quickly. So what's going to be needed now um, for the euro side of things, because the dollar can be weak enough to send all dollar bills lower, but for the euro side of things, I think we really are going to need hard data to back it up. Is all this spending going to help the economy? If it does, then I think the money managers will continue to buy euros, and then we can see much bigger moves unfold. If the Greens say no, and the card house risks falling apart, and it's getting followed by weaker hard data or weak hard data, Europe not being able to come out of its slump, then the euro is going to turn around.
Yeah, yeah. I mean, I said it last week. I'm calling all this 500 billion stuff bullshit in terms of making a lasting impact on the economy. It might be good for some short term sentiment. We'll probably see it in the zoo and IFO next up, but I can't see it lifting economies. Well, Germany's economy that much,
Yeah.
except maybe in defence. Who knows? We shall see. It's going to take more than that. And this is just Germany. Germany's not going to lift up the whole economy. The
I was
whole
going,
Eurozone
yeah.
economy.
I was going to say just before we had this plan coming up, we saw that the French data actually turned sour. And so it's not only Germany, because if France turns sour, then you're still going to be like somewhere on a very, very fragile balance, right? Okay, we saw the south of Europe is actually doing okay. I mean, Spain is actually doing really well, but then the rest needs confirmation. And who says Germany and France? You can't completely forget about all those that they were calling in former years the core Europe, those like six I think, which were like Netherlands, Belgium, Austria, and I think another one with France and Germany. If those data don't improve along the line, then that's a real danger for the euro.
Yep, absolutely, mate. Absolutely.
Okay.
Right. I've just had a little sell in dollar yen at 0.2. Let's see what happens with that one.
I thought you were buying.
No, I'm saying it. I think this is going to
Okay.
break down. So
Okay.
147 starts holding. I think we're going to be heading much lower. So yeah, I've gone for a little short at 0.2. Right, let's move on from the German stuff. Well, there was some German data out this morning as well. Not helping much at all. We saw industrial production down 1.49%. On the month, though, it did rise 2%, beating expectations 1.5%. Trade balance as well, not looking worse on the surplus, down to 16 billion there. As you can see, exports slumping a big chunk there. Imports remain in the positive. So again, just shows you the scale of work to do. Okay, I haven't looked into this data, but Norway's CPI took a massive jump.
Mm.
Core CPI 3.4%, up 6 pips.
Yep.
Headline CPI up 13 pips. Anything behind that, or Norges?
I haven't really seen the details, but that is something I don't think that they were thinking it would jump that high. So that's one to pay attention to. And again, I didn't have the time really to look at any details as such. But yeah, that's where Norway, Sweden were pretty much on their way to getting there. This is a bit of a setback, obviously. And if you see that that PPI jump is quite spectacular as well, right? This is yeah, this is not going the right way for the Norges Bank. Just let's not forget that the Norges Bank is selling a little more Norwegian kroner every day this month than they were doing last month. They are not huge amounts, okay, but just beware that they are selling a bit of Norwegian kroner every day. So it may not help the FX too much. But this being said, the size what they do every day is not going to hold back a market if we are in a big turnaround. I actually bought a bit of Noki Stocky this morning. Sweden has come a long way as well. It is an accelerated euro, as we know. And Norwegian kroner has been a laggard versus the Swedish kroner, rightfully so, because the oil and gas prices have come down, and Norway obviously being a big exporter, it has weighed a bit on the Norwegian kroner versus Swedish kroner. But I think we've come to reasonable levels there to put on my butcher's glove and try to catch a bit of a knife.
Yeah, looks like you caught a nice one there, mate.
Yeah, well, I bought it not that far ago. I think around, what is it, 93 3/4, or was it 92 3/4? And I must have a look at it because no, it's 93 something there. Yeah, 93. Nah, it's okay.
Right, let's go back to the data. So I'm keeping off an IME trading screen now. Trading while we're showing. See, exactly. Can't get more live than that. We also got Eurozone Centix Index, which I'm not sure this reflects any of that German fiscal spending, but even so, the news maybe been bubbling under the surface. So we saw a bit of an improvement there. So this is investor confidence. Might even see it turn positive at some point. Let's see when was the last time it was positive. Oh, look at that! Just after COVID, and then before that, before that, yeah, it's not exactly the greatest indicator, we think, but shows you the swings and sentiment in stuff. But yeah, so COVID times was the last time we were positive in that one. Maybe we shall see it again. You know, it would be surprising me if we get Eurozone consumer confidence going positive, mate. If we see that, then you definitely don't want to be short euros.
What is that?
I don't know. It's probably coming up in a week or so. Yeah, that one's been a minus whatever for forever. I think it's been positive 4 times in its entire history. But anyway, yeah, we'll keep an eye on that one when it happens. Right, let's go back to US stuff from last week. Have run them all over the data. So non-farm payrolls, everyone was getting a little bit nervous about what was going to happen. In the end, nothing happened whatsoever. Non-farm payrolls coming in pretty much bang on expectations, 151,000. No massive moves to the revisions. No big problems in the government number either. That came up 11k. So perhaps we've not yet seen some of those government numbers coming in. It's still a messy situation because a lot of those voluntary redundancies, that program, they are still being payrolled until I think it's September or something. But it's a fluid, messy situation, but nothing showed up in that. Average hourly earnings, they came in still around that 4% mark. They were down a bit, but we've been glued to that 4% forever. The unemployment rate, that did tick up, but that also came amid a drop in the participation rate. So it's all a bit mixed. Overall, Kate, nothing really to do. Just keep the market from getting too panicky, I think.
Yeah, well, that's what we said. We don't really know when they're going to show up in those numbers, and we're seeing a lot of different opinions. Wait for the next wait for the next one, and welcome the winners in our community.
Yeah, exactly. Nice, 3 good winners for that. Canada jobs posted again 1.1k, lower than the 19k expected. This one has been running really hot for the last couple of months. So as I said on Friday, wouldn't be a surprise to see a bit of a softer one. All the moves were in full-time employment. That dropped 20k. Even while part-time employment went up. Unemployment rate, though, stayed unchanged, 6.6%. Participation rate there also coming down 2 pips. So no real change as far as that goes. We've got the BOC Wednesday. Is that going to, this data going to influence anything? It has come off a strong run over the last few months.
Well, that influencing the Bank of Canada, I would not think so right now. And I think for the Canadian dollar, I'm going to say the same thing as for the ECB. It doesn't really matter. We've got the Carney election, and I think the market will be hanging on to that and his relationship with the US administration, and viewing it as much more important than the Bank of Canada at this particular meeting, I'm saying.
Yeah, we are expecting another cut of 25, but I think I'm seeing a lot more chatter that it's not such a done deal, or may not be a done deal, that they may decide to go on pause. One of the lines that Macron took at the last meeting, one of the reasons for cutting, was all the tariff stuff. We wanted to prep the economy for any potential pain, given the shit show it's been in deadlines and kicking deadlines and whatever. Maybe he wants to wait and see a bit. So yeah,
agreed.
Yeah, so yeah, it might not be as clear cut as you think. So if you're trading the loonie this week, keep an eye on that one for Wednesday. After all that US data, or after the non-farm data, market's still expecting 75 basis points of cuts, so 3 more cuts this year. But doesn't look like a lot of the Fed members might agree with that, particularly for the upcoming Fed meeting. Fed Kugler says it's appropriate to hold rates steady for some time. Says the jobs number was solid. Hiring is still above the break-even level. There is a reason to believe there could potentially be more persistent inflation. Fed's daily caution needed with monetary policy. Fed's Powell was out Friday afternoon. He said there's no need to hurry on rates, can wait for greater clarity. The one-time jump in prices generally doesn't need a monetary policy response. Talking about tariffs, he says if this turns into a series of actions, or if tariffs are larger or expectations start to move, that would influence how the Fed reacts. We also got a bit of consumer credit data out from the US Friday evening, and pretty much a drop back to, I would say, more normal levels. We had a big ballooning, I think it was 40 billion in December. The consumer credit numbers nearly 41 billion, which was a bit of a jump. That got revised down to 37. I'll put that down to seasonal stuff. Now we're back at a more respectable 18 billion. But keep an eye on that one if we start to see problems from the consumer there, putting credit card spending higher. Mexico's economy minister says that they will be having meetings with the US trade team this week, saying we have to reach an agreement about steel and aluminium tariffs. Those have been touted for coming this week as well, that they may still go on. Despite all the other can kicks. Mr. Mark Carney, as Kay said, he won the leadership contest in Canada, so he is now the new PM, succeeding Trudeau. He kicked off by saying that retaliatory levies will stay until Trump drops tariffs. So he's taking the same line as Trudeau on that thing. One of the first things he will have to deal with, apart from Trump, is China, who are going to impose additional tariffs on Canadian goods. They're sticking 100% tariff on rapeseed oil, oil cakes, peas, and a 25% tariff on aquatic products and pork. These measures will take effect from the 20th of March, and there will be further details coming on that. US Treasury Secretary Bessent says there is no change in the strong dollar policy. It says Trump wants to get to a fair trading position with China, but we're a long way off. This one made a lot of people laugh on Friday after the market sort of moved on the headline. A piece got dropped that Russia's President Putin is reportedly ready to agree to a Ukraine truce with conditions. As I say, the headline got the market moving until everyone read the conditions, which are basically make a truce non-existent, given the conditions that he wants. Ukraine President Zelensky says there's been intense work with President Trump's team, and that's been ongoing at various levels, and there's been numerous calls. The topic is clear: peace as soon as possible, security as reliably as possible. Ukraine PM says that the Ukraine has signed a €2 billion reconstruction deal with the European Investment Bank. It's also received the first tranche of money from the UK, secured by proceeds from Russian frozen assets. And if you're living in Poland, PM Tusk says that by the end of this year, we want something in place, a mechanism for having every adult male trained for the event of war. So stand by your beds, men, if you're in Poland. That's it on the headline front. Unless you've got anything else, Kate?
Well, just that Japanese Trade Minister Muto is in the US today, meeting with Lutnick. So there's maybe a few headlines there that may move the yen a little bit if he succeeds to have Japan avoid all those tariffs. That would be that tailwind for the Japanese yen that continues to be in play, I guess. And apart from that, no, it's going to be a relatively quiet start of the week. It's going to heat up as the week progresses.
Yeah, thank you very much, mate. Right, let's have a look at what's going on. Ali, you're a bit concerned about the euro. Getting in some shorts here. I've been speaking about this zone. I told you about this zone. We can't get through the top of it. We've had times when we struggled to get through the bottom of it. We can't hold below it at the moment, it seems. So we are now making a decision. We need to do something here. So it's not clear what the euro is going to do. Is it going to continue this rally? It's possible, but to do so, it's got to get above 108.70. So if you get a move above here that starts to hold, then we're heading higher. But at the moment, we're just struggling up against it. As I say, when we get in it, there's times that we find support in the zone. But again, if we break it, we've got to hold the break, and we can't do that at the moment. So this is a coin toss. The market looks more balanced now for what it wants to do. So you've got to take your cues from what we do at this zone. As I say, if we're holding underneath and properly holding underneath, then there's every chance that we head back lower. But where we dip to, I don't know. 108 or into that figure is where we've held this morning. 107.60 is my marker for this whole area. If we're getting below here, then we're probably going to see a bit more downside. But who knows, we might just run down to the 107 and set up a bit of a range. But this zone is often one that you need to take your direction from as more as a pivot point than that. So keep an eye on that one, Ali. I'm still long. I did try a little short earlier on, and a little separate short after we got that lift on the Centix, but that got blown out the water pretty quickly. I'm just hoping that dollar yen doesn't go as quickly, but that seems to be doing all right. So yeah, that's your marker, 108.30.70. Use this. You can trade it if you want, but use it more as a pivot area, whether we're getting above or below it. Let's have a quick look at dollar yen.
Something going on with the Greens there, I think, in Germany.
Oh, yeah, Greens won't support the draft debt package in Parliament. Oh, there we go. So now we're getting a little bit of a kick lower.
Yeah, euro is coming down.
Yeah,
Euro yen is getting a slap. All the euros are coming down.
there you go. That might be your get out of jail card, Ali.
Yep.
Keep an eye on that. Yeah. So Germany's Greens won't support the draft debt package in Parliament. I wouldn't say that's going to last. They want some concessions. It's up to Merz as to whether he gives them those concessions. So that is an ongoing situation. Keep an eye on it. I would suggest, Kate, probably they will get a deal at some point, but that, we're going to have to trade around the headlines in the meantime.
Yeah, but what are they going to do to make it greener? That's my question. But yeah, I mean, this is what we've been saying, and what we've been talking about with in our chat room as well. I mean, this is the risk that the euro is encountering now. Is if there is no deal, it could harm the euro quite a bit. So now we will see. Whether they come back to the table and find another agreement, because then your euro is probably trading 60, 70 pips higher again.
Yeah, absolutely. So watch that headline anyway. And thank you. That's doing my dollar yen no good as well. Typical. Right. Let's get on. What else is going on? I was pointing out what's going on in dollar yen. Oh, come on, computer. So this is a big old level down here. I was mentioning that if we were breaking under this 149s, 150s area, 147 was the next biggie. And here we are. And we spent a couple of days messing around with it. If we break under here, we got a bit of minor support area around 146.5, bit of old traffic going back to here. Otherwise, it's the 145, which is another big zone, 145, 144.90. So all these big levels are having a say in things. Be there we testing them as support, or we then finding resistance against them on the breaks. Rallies are still getting sold. Okay, 148 is now close resistance. We'll see if it lasts in this move. But when is this going to turn, mate? Is it going to turn? I mean, this is pretty much one-way traffic all year. It makes me wonder why we haven't been selling the rallies every day.
Yeah, well, I'm a bit short European, but yeah, barring barring a few sniper trades, I haven't been really participating too much in it either. Um, there's still a lot of tailwinds for the yen, and yeah, I was actually trying to wait for a clear picture of what I would get on the financial year end and start of the new year, but nah, it's probably one where you just sell rallies. I mean, I've been on it a couple of times, but really, the first 5, 6 big figures, I haven't done anything from 158. But yeah, as I said, still a lot of tailwinds for the Japanese yen, and there may be more if the wage agreement goes well, if Japan avoids tariffs. Trump was trying to put some doubt in the minds, but I don't. Well, I mean, logically, if you look at the relationship with China, if you look at the situation, I mean, unless Trump goes, yeah, we are just fine on our own. We don't need anyone else anymore. They should still be quite clement towards Japan, no? And then we're probably in for a bit more of tailwind in Japanese yen.
Yeah, absolutely. I think so too. Right. I've got to look at what's going on this week. So we'll have a quick look at that. It's often a quieter week after the jobs week, but we do have a few bits and pieces out. Got JOLTS tomorrow, Japanese PPI tomorrow as well. Wednesday, US CPI. So that's going to be a pretty important number coming ahead of the Fed. And then it's the BOC. A reminder that the US clocks changed on Sunday. So everything, if you're in Europe, in terms of data and whatnot, is now an hour earlier than usual. So factor that in. That's why we've got a lot of Yanks in this morning. Hey, Yanks! You're all up bright and breezy for our time zone. Thursday, jobless claims and PPI data. That's going to add or subtract to the CPI data. A little bit of data out on, excuse me, out on Friday. Final German CPI numbers and some monthly GDP data there, and US consumer confidence, the old Michigan, coming in on Friday as well. So not a big data slate, but a couple of key points anyway. Whoosh, get rid of that. Right, just looking at the clock, Kay, I'm going to pass it over to you, mate.
Yeah, okay. Just note, guys, that the euro is still making a pretty easy comeback there. Every time, just because the market is not yet ready to abandon the whether it's the positive euro view or the negative dollar view. Okay, there's one that I'm because I'm in it right now. The thing is, I've in this euro yen. There's a couple of possibilities, right? We could be still on a head and shoulder, but the interesting one on Friday was that we went into the cloud and but we couldn't close inside it, and that is one that I'm going to be keeping an eye on. This together with the 61.8 here and the top end of this triangle, the top end line. So this is one I'm going to try to play this zone from a bit of a more medium term perspective. Obviously, if Germany manages to keep the whole market positive, I would say this is probably not going to work out. But for as long as we are here and we're getting capped in those zones, I'm willing to give it a go now and to see if we can at least get back to those 155s maybe in the euro yen. Just note that to make this happen, head and shoulders, we really are going to have to break 155 and a half, 156 again, but hold below it. All right. So far we have seen those several tries down here, but it's been violently rejected. Yeah, we have done from those lows here. We've gone up 600 pips, which is quite a move, right? That's 4%. So it is going to be volatile. That is why I am trying to go with a small and gradual build up. I actually already took a slice back this morning and going to reset on rips, because that's the way that I want to construct my position. You know, always take a little bit off the table. If it bounces back, you can add again, and your average is only going to get better and better. This and to reduce too much risk if ever it would blow up at one stage. But this is the way I'm looking at it. The this those antipodians, right? I mean, again, both Kiwi and the Aussie could still be working on a longer term bear flag. And especially on the Aussie side, I would say we're getting rejections relatively quickly. We do see dips coming in here that have been bought around 62.80. I think 62.70 is going to be a decent level, but we keep coming back to this 63, 30, 35 and finding it a bit of a tough nut to crack. So it does seem to me that the antipodians, the commodity currencies, are still not out of the woods, and especially on the Aussie, it looks like the market is not really buying into too much strength. If we get back above the 63.60 here, we could have a look again at 64, but be careful what happens here. We're really going to have to break above here to keep on going. And for once, I think the Kiwi may be in a bit of a better situation. Yes, we are still also potentially working on a longer term bear flag. But if we get back above this 57, 50, 60, I think we could see a quick move into the 58s. There it will be decision time. And you know the difference. If we get to 64 on the Aussie, we're not yet at the top end of the potential bear flag. But if we break above 58 and a quarter in the Kiwi, we are going to break the flag. And it looks a bit closer, this potential, than on the Aussie, to me at least. So if ever we get up there and we start to break, I think the Kiwi could be in. But for as long as it doesn't, obviously we respect the price action, and if it caps around here, we will be working on this bear flag. Okay. keep an eye on what's happening at 57, the figure. I wouldn't. I'm not in the Kiwi, but keep also an eye on 56.80, because if that goes, then I think we can be back relatively quickly to 56. But for the time being, when we look at the dollar, we are still in the phase, I think, where the market is doubting the dollar, and it, so for me, there's still a potential for this to get back up a bit easier. I'm just going to get back to this Noki Stocky, okay? I think, and I'm by no means a bull on oil and gas, but I think we've come quite a long way. We were discussing this with DK in our room already around 95. We were saying, like, is this not enough? Because if you look historically, we have rather been trading 95, 110 on the Noki Stocky, but it came down here. And one of the reasons is that I've always said, I mean, the Swedish krona is an accelerated euro, okay? So now we have seen the euro do a lot better. So it is somewhere logic that the Swedish krona has done a lot better as well. But and in the meantime, we came down quite a lot on oil and everything. But then look at this level here, somewhere in the 92.75 in 2020. So we had 2020, the big drop here, obviously on the pandemic. Then we came back down and we started to go up again. Now we've broken below here on those weaker oil prices. The Norges Bank selling Norwegian kroner regularly. So I mean, it was and the revival of the euro. So the Swedish krona has benefited from it. But I would argue that we are in a bit of arriving in some sort of a zone here. That's why I've started shyly to get long a bit of Noki Stocky, and I'm looking to add if we get back to closer to here, and then keep an eye on what's happening in the low 92s if ever we get down there. Okay, so the risk is relatively okay. If we start to get back above 95, I think then we can dream about perhaps getting back up to 98. So why not even parity to stabilize? But therefore, we're going to have to need some stuff to change. Like for instance, if the euro weakens again, the Swedish krona will be weakening again, or if we find support in zones on oil and gas that make the Norwegian picture look a little bit better outside of that inflation thing that we saw today, then also we can start to move a bit higher again. And that's it for me for today, Ryan. Back over to you, mate.
Thank you very much, mate. Good stuff as always. Yeah, I hope you got you set up for the week ahead. As I say, don't forget to check that clock change. We're going to be back in 40 minutes, mate, on the old face show. So, yeah, maybe have to cut these down a bit during that clock change time. Right, have a great day. Have a great week, everybody, and we'll catch you all tomorrow.